Welcome, everybody. My name is Aleck Montes with Community Mortgage Funding, and today my special guest I'd like to welcome is Alan Young, who is a senior loan officer here at CMF and has been in the mortgage business for over 20 years. Throughout his years here in the business, it has changed tremendously. And having 20 years of mortgage experience, we can learn a lot from Alan. And today's discussion is let's talk about refinancing. But before we get into today's topic, I'd like to highlight the CMF Home Rewards program. It's available to all members of the credit union where home buyers can get appointed a professional real estate agent. So if you're looking to buy a home, you can get a real estate agent appointed to you and receive a realtor rebate. And this gets applied to lower your closing costs. This is a huge benefit for members. And you can also view homes for sale. If you're also thinking about selling a home too, they can help you with that as well. You can read more about it through the CMF Home Rewards on the credit union's website under the mortgage loan section. So let's welcome our guest, Alan Young. Alan, how you doing?
I'm doing outstanding, Alec. I appreciate that. Thank you for the introduction. Just a quick clarification. I've actually been in the business just a few months shy of 35 years.
35 years, Alan. I didn't want to age you there, so I was
Well,
lowering that there.
you're doing well, and it's a great time to buy and refinance right now.
Great. And so today's discussion is this. Let's talk about refinancing after we purchase a home. So I know you've been helping a lot of members buy a home, but we get a lot of questions after the fact. After they're starting to pay their mortgages, we want to know why should we refinance and when should we refinance? And on top of that, is there a goal to achieve? So I know there's three questions there. Hopefully you can help dissect those for us.
Sure, absolutely. Well, taking the last question first, what goal to achieve? Normally, it's one of two items. It's either to lower the payment or it is to pull cash out to pay off debts or to do home improvement. And both of those scenarios have different requirements as far as will it make sense to do so. Um, with historical low rates over the past 6 years, um, refinancing now may not be the best thing for you. You might not be able to lower the rate, but it may benefit you if you're looking to pull cash out with the large amount of equity we've grown to help put in a pool or do home improvements or pay off high cost revolving debt. Those types of things make a lot of sense. The other factor that comes into play is if you took out a loan and you came in with minimum down payment, maybe you took an FHA loan or you had to get private mortgage insurance on a conventional loan. With the increase in values that we've seen over the past 2 years, um, doing a refinance, even though the interest rate might be about the same, you may be lowering your payment because you're getting rid of that high cost mortgage insurance. So there could be that benefit as well, Al.
Yeah, so the mortgage insurance, I know here, especially in California, but I mean other throughout the entire country, I know property values have been increasing and people get into their first home with mortgage insurance. And of course, that's not necessarily there to benefit the member, it's there to benefit the lender as protection. And that should be, is that one of the main focuses right away, as far as trying to remove the mortgage insurance? And can
Yeah,
you
most
elaborate?
that's that's a conversation they normally will have with their lender when they're purchasing the home or taking out the original mortgage. What do we have to do to get rid of the mortgage insurance?
Right.
Really depends upon what type of loan you have. If you have a federally insured loan, such as an FHA loan, that mortgage insurance never goes away. It stays on for the full duration of that mortgage. You have to actually refinance to get out of it or sell the property. On a conventional loan, depending upon the contract that the lender has with the PMI company, the private mortgage insurance company, mortgage insurance will fall off at a predetermined time. And it's all based off of the value of at the time you purchased it and how much money you put down. So there is a timeline there that the lender should have given them on when that PMI or the private mortgage insurance will cease. That's not the case on FHA's forever.
And so we're talking about conventional and also high balance loans, correct? Which are still conventional products.
Yes, absolutely. A high balance loan is still normally a government a loan that was sold to the GSAs, Fannie Mae or Freddie Mac.
Hmm.
Any loan that is a conventional loan that's sold to either one of those agencies has to have PMI, private mortgage insurance, if there's not 20% equity at the time the loan closes.
And before we move on to the next question, I want to circle back to the first one as far as why and when. Now, you did mention by pulling cash out or lowering the rate. I know the rates are up today, but in the event when rates do drop, I mean, obviously that would be one of the targets to go after. You can obviously know what your interest rate is versus what they're offering. You can see it on TV, but and even calling up your credit union. Is there? I wanted to get on the subject about cashing out and reducing debt too as well. You mentioned paying off some debt. Can you elaborate what debts are we talking about and how does that benefit you? Can you kind of just give us a broad stroke of that?
Well, yeah, and it depends upon each individual's scenario and what type of debt that they have. Because if you do a refinance and you're rolling it into a 30-year term, you are going to lower your overall monthly obligation, but
Hmm.
reducing the payment of the debt out. Um, on a revolving debt, it usually really makes sense because if you're making minimum credit card payments, you're not going to get that debt paid off in about 24 years is the average. So rolling that into a 30-year mortgage or a 20-year mortgage makes a lot of sense. If you've got a 5-year car note, it may not make sense to roll that in. Even though you reduce your monthly payment, you have now extended that debt to a 20 or 30-year term that you were only obligated for 5 years. So
Right.
it's really a thing that the loan officer needs to discuss with the consumer in detail.
Right. Just kind of get an idea of all the collective debt that they have and see which one's going to be more beneficial.
Yes, and again, revolving debt is a good one to pay off in a refinance. And then anytime you're going to pull cash out to do home improvements, not only are you improving the home in the equity position, but you're borrowing money cheaper than you would if you put it on a credit card or took a second mortgage out.
Right. Because credit cards are very high interest rates opposed from, say, a
Correct.
mortgage rate.
Second mortgage, or what they call a HELOC, a home equity line of credit, it's tied to the property in second position. Therefore, it has a higher interest rate than first mortgages do.
Gotcha. And then moving on to the next, I know you've mentioned already some of the benefits. I think I just want to see if we can bullet point those benefits. Can you name a lot of different benefits to borrowers when they refinance? Obviously, we know probably it's the payment at the end of the day, but there's many other benefits too. You mentioned home improvements is another one, cashing out, consolidating debt. Is there any other ones that you can think of?
There are, I mean, one of the benefits that a lot of people don't consider is if you can pull equity out of your property and you can have that equity put into retirement fund or something. So you have that money available and you're borrowing it at a relatively low interest rate.
Hmm.
And you can put that money aside for a rainy day or for, if you do hit hard times. So that is a benefit that's really not spoken of.
Yeah, that's true. That has been something that is people have done in the past, even for, maybe their children's tuition for college or something. That's coming up, and so they have the money out and ready available to them too.
Absolutely.
Um, but
Absolutely. If you're borrowing money at say, at 4.5 or 5.5%, that's probably going to be a lot cheaper than putting those student loans against your child. Those rates are typically higher and the payments are normally higher. So it is a big benefit when you're looking at that for doing a cash out loan.
how do you feel about consolidating a first and second mortgage in the instance where somebody purchased the homes using a combination loan?
Yeah, that's a good question, Alec. And it really will depend upon current rates and what the interest rate is on the first mortgage. The interest
Hmm.
rate on that second loan that you combine to buy the property is always going to be higher than the first, but it's a much smaller loan amount than the first. So
Hmm.
have an extremely low interest rate on the first, it might not be the best benefit to refinance the first and second together if the rate's higher. So it really is going to depend upon what is that rate on the first and how large is that second mortgage.
Gotcha. Gotcha. Moving on to the next topic here, or the next question was about home improvements. And this is probably, you probably have a lot of experience on this. And what can people do to their home to make it beneficial as far as increasing the value, or what are the possibilities? I know people can do anything they want with money, but what is the most beneficial thing to do as far as home improvements? Because everybody's watching these HGTVs to make their homes customizable to their look and feel. As far as in your opinion, what are the best home improvements?
Well, it really is going to depend upon their what their plans are with that particular home. If they are thinking about doing home improvements to sell the property, that is different than doing home improvements to stay in the property. Because
Hmm.
what I mean by that is, if you want to flip this property, you want to see, you're only going to live there, say 12 to 18 months.
Okay.
Putting in a pool or putting in a granite countertop might make the house a better resale, but dollar for dollar, you're not going to get nowhere near the money that you invested back. It will make
Hmm.
it a more attractive home and you can probably get more offers, but you're not going to get dollar for dollar. So a lot of times it's more going to be more cosmetic, or if you really want to increase the value, you want to add square footage to the property. That's going to give you a better resale. Add a bathroom. That gives you a better resale than putting in a pool or putting in granite countertops. You're never going to get the money back.
Right. We do see a lot of, say, older homes that are 3 bedroom, 1 bath, and to add that second bath, that would be a huge improvement.
Absolutely. That's one of the biggest benefits that I've seen over the years is putting in a second bathroom, especially not knowing where people are, but a lot of homes here in Southern California that are older, they were built one bath.
Yeah.
And people nowadays, they won't even look at a one bathroom if there's a family. If it's a one person, yes, but if it's a family with two children, they won't even entertain an offer, to look at one. But if you have a second bath, you've opened up the floor for a lot of people to be interested in that particular property.
So your money, as far as going a long ways, is get a second bathroom opposed from, let's say, a pool, because everybody wants a pool, but maybe not everybody, but a lot of people do.
Yeah, pools are probably, I mean, I love them. They're aesthetic, they're beautiful, but dollar for dollar, they're the worst investment that you can possibly make. You can spend, and I'm just throwing a number out there because you can spend a lot more. You could spend $70,000 on a basic pool here in Southern California, and you're only going to get about a $10,000 resale value. Not a huge difference.
Not a big difference there. Yeah. Gotcha. Yeah, that's what I was thinking too. And the bathroom for sure would be a good one. What about adding an extra room?
Absolutely. If you've got the ability, now you're talking more permits and stuff like that, but if you've got the ability to do that, anytime you're adding square footage, you're adding value to the property. Adding granite countertops or adding, the top of the line flooring doesn't really give you much value. It gives you aesthetics and a better sell. But if you're adding square footage, you've now added value and a better resale value on that property.
I wanted to lead into one last part of, as far as adding another room. I've been hearing here, maybe in Los Angeles County, that they're easing up on some of the permits to allow maybe a second unit to be built on a property. What are your thoughts on that? Have you heard that, or build? I don't know what you want to call it, like it.
They're called
'Cause-
EDUs. I've got a buddy that owns a company. That's what they build, and they are just killing it. They'll add
really?
extra dwelling unit on a property, and the state of California has passed a law that allows it. So they can just add this 900 square foot or 800 square foot extra dwelling for a fraction of the cost of somebody to come in. They're prefabbed,
Hmm.
and that really helps the value. Now you've got two units on a property that's single family, and now you've got income producing property, which really helps the resale value. Depending upon where the property is located, that is a wonderful, wonderful tool.
Right. So if you got some land, that would be a great option for an upgrade.
You don't even need a lot of land with the new law, and I wish I could remember the SB bill that was passed just relative within the last 12 months. And I don't know it off the top of my head, Alex. But you can look it up and Google it. But you don't even have to have a lot of land. They're putting these EDUs on single family properties in neighborhoods, and it's illegal.
Yeah, I've been hearing about that, and yeah, there's been a lot of talk about that going on. So that might be beneficial for those who are looking to seek
Yes,
additional income as far as rentals. You know, it's one of probably the easiest ways to go about doing it.
100%. And that would be a great reason to do a cash out refinance. Because now you're not only bettering the property for resale, you're making it an income producing property at the same time.
Since I got you on the line, I do want to extend it to one more question for you, Alan. Since you have such an in-depth knowledge about a lot of things. There's been a lot of talk about people wanting to purchase land. I mean, we can pull out cash from the home as far as our equity, and they're looking to maybe buy land. What are your thoughts on buying land right now?
That's a good question, and that's a tricky question because most lenders do not lend on bare land.
Hmm.
Typically, bare land is purchased between buyer and seller. The buyer brings in a down payment, the seller carries the paper. That's typically what happens with most. An advantage, doing a cash out to buy land is going to give you an advantage on your offer to the seller of that land. Because to
Gotcha.
get an actual mortgage on land is very difficult. There's not many avenues out there to obtain a loan. So if you're able to do a cash out and you want to buy land, and right now the Lord's not making any more land, so there's only so much.
Right.
You get land and hold on to it. It can be a good investment. It's a little bit risky, but it can be a good investment um, because
Right.
it's difficult to get a mortgage on land.
Because I'm seeing that people are, well, I'm just been reading some articles that people may be cashing out and maybe going to other states and then maybe trying to secure some plots, for themselves as future investments, or maybe that's something that they want to build a home later on, but at least to secure the land itself. So that's why I wanted to ask you just your thoughts on that. So,
Well, I totally agree with you. I get a lot of calls with regards to doing that and purchasing vacant land. And again, I have to tell them about the cash out. It has been a really big tool because the price of homes have escalated so dramatically. Um,
mhm.
the land is attractive and then they can hold it and then put a home on it a year or 2 years down the road when they're ready to. They're not obligated, but they already own the land at today's pricing.
Great, great. Well, we appreciate you so much, Alan. Is there anything that I missed that maybe you want to add to this before we go?
No, I would just say, as a consumer, just do your due diligence and make sure you're working with a reputable lender that's looking out for your best interest. Ask a lot of questions. It's not always the interest rate that makes the transaction favorable. It's the whole scenario and what you're trying to accomplish. So too many people get wrapped up in interest rates and they forget about what their goal is to do. And so it's important to have a good advocate that's working with you to get that deal done.
Thank you, Alan. I appreciate all your input, and hopefully we can talk further on, how to find a deal when you're maybe rate shopping, because it's not all about rate, like Alan was saying. It's the big picture, and you've got to see the whole thing. And especially talking to somebody who's been in the business for 34 years, knows what he's talking about. Alan, we appreciate you, and we hope to speak with you soon.
Thank you,
Thank you
Alex.
for coming.
I
All
appreciate
right.